the recent announcements of, we've got a few new policies in place about how the country is going to be handling finances. Another concerning issue has been, we're printing a lot of money. What does that mean for the people? Another report came out recently saying that inflation's on the rise. So we're kind of trying to understand it all, you being an expert.
Sri Lanka Insurance Motor Plus, driven by you.
Hey everybody, welcome on down to the hot seat. This is Blessie and Lloyd from the morning show on Light 87. We're so excited to have you, and we have a very special guest today on Zoom with us right here on the hot seat.
That's it. Thank you, Deshal de Mel, for joining us on the hot seat. Now, again, we're going to start off. I'm going to say at such a young age, you've done so much. It's quite a long list. I'm going to look at this. I'm going to go through this one step at a time. So you've studied at the Oxford University. At a young age, you worked at the Sri Lanka Institute of Policy Studies. You went on to the UK. You studied international economics. Came back to the IPS. You were a part of the Strategic Business Development Unit for one of the most esteemed companies in Sri Lanka. One of the youngest directors appointed to Sampat Bank, advisor to the former finance minister, recognized as one of the 10 outstanding young persons of Sri Lanka. You are a research director at Verite. Recently, you've been appointed as another independent non-executive director at another major company. There's so much you do. If someone stops you, if someone asks you what you do for a living, what do you say?
What do you even say?
Do you nod and you're like, hey, listen, if you don't know who I am, maybe we shouldn't have this conversation?
It always gets awkward, because I just say, depending on who it is, I say all sorts of things and I just get, confused and they just think I'm really shifty. So my wife always says, just say that you're an economist. So now I just usually say, I'm an economist and, try to hope the questions and but it can be a bit confusing at times.
Just so you know, ladies, he's taken, okay? So if you were impressed by that resume, he's off the market.
Right, and the reason we've got Deshal de Mel today is, now again, Deshal, with the recent announcements of, we've got a few new policies in place about how the country is going to be handling finances. Another concerning issue has been, we're printing a lot of money. What does that mean for the people? Another report came out recently saying that inflation's on the rise. So we're kind of trying to understand it all, you being an expert. Thank you for your time. So we'll dive into it.
Let's dive into it. Of course, now we just welcomed a brand new finance minister into Parliament. So there's a lot of optimism, I think, in the market. Today, perhaps the stock market didn't necessarily show much optimism. It was the first day after all. But one of the most recent concerns, and I think it's important for everybody to understand the impact of this, in particular, the 200 billion rupees that was recently printed. How does this affect us? Should we be worried? Does it make a difference?
I think it's important to understand what we mean by money printing, right? So the kind of best way to define it is when the government runs a budget deficit and the central bank directly finances that. So under normal circumstances, the government, if it runs the deficit, it could finance either by borrowing from the domestic treasury bond and bill market or by borrowing from overseas. Now, in this case, the central bank creates new money and finances the deficit. So that's the kind of technical way of understanding what a layperson would call money printing. And over the last, say, 18 months, so from the start of 2020 until around June 2021, the central bank has financed around 850 billion rupees worth of government debt, right? So in late terms, we can say 850 billion rupees has been printed. Now, this recent story about 200 billion rupees, that's a bit of a red herring because that was not really money printing. It was latter part of June. There was on one day, the central bank's holdings of government securities spiked, but by the next day that was reversed. So that was basically a book entry for a transaction. So that wasn't really money printing.
Okay.
But still, we have seen 800 billion rupees over 850 billion rupees over a period of 18 months, which is very substantial.
Right.
And the reason for that is, of course, because the government has run a large budget deficit. So in 2020, the budget deficit was 14% of GDP. And that's very high by any standards, right? By global standards. And even historically, I think the last time we ran a deficit of that nature was maybe in 1987. So it's a pretty high deficit by any measure. And of course, during a pandemic, you'd expect that kind of deficit to take place. So the money printing is really in order to try to finance this deficit, whilst at the same time preventing interest rates from going up too much. So that's the kind of context of where this comes from.
But is it as simple as we have a deficit, let's just print some money to cover it up? If that's the case, why not just finance the entire budget deficit by just printing money?
So it's like this. So when the economy is in recession, during a downturn, it's possible to print money without having significant ramifications, right? But what happens is when an economy starts recovering, when you start to see economic activity taking place, when private individuals, private companies also start demanding credit, then you can see overheating, right? So that is, I think, what we started to see in the early part of 2021. So there we have the government injecting large amounts of credit into the economy. And at the same time, private individuals also, we saw that after the lockdown started easing at the end of last year, when the private sector also starts getting back into gear, then you start to see from two fronts this credit expanding. And then that starts creating excess demand and demand pressures. So that has two ways of kind of manifesting. So either it causes inflation or it can start to trigger demand for imports, right? And then you start to have balance of payments pressure on the currency and so on. So in Sri Lanka, what we have seen in the first half of this year is the latter. We started to see greater import demand that starts hitting the currency, that starts drawing down our reserves as well. Right. So that's really that channel that we have seen in the first few months of this year.
Right. So in this case, Deshal, now we're also hearing about places like the US, they're printing a lot of money. Now the report that Colombo experienced about 5.2% inflation, which is again, just ridiculous. I mean, over the month of June. Again, typically people would say, look, all of this is because we're printing money. But how does this if other countries are doing this as well, what alternative way can we go about this? Okay, so borrowing money is also kind of frowned upon, and printing money, of course, has a direct hit on the value of currency and all the sectors that you just mentioned. What's a better alternative? Are we on the right track?
Let's first see the difference between a country like the United States, which has been pretty much in the at the thick of it in terms of expanded money printing in recent years, and before that, even you take a country like Japan that has been doing this for a couple of decades now. So there are important differences between those countries and us, right? So quite a few people think that, look, just because if the US is doing it, if Japan is doing it, why can't Sri Lanka do it as well? But the important thing is those countries, say the US, for instance, the US dollar is a global reserve currency, right? So if the US Federal Reserve creates excess money, then that doesn't necessarily have to find demand in the US. Anywhere in the world, people will want to buy US dollars, and there is always demand for that, right? So what happens is that excess cash can always flow into different assets, different countries, different regions. So like one of the reasons why you've seen assets such as cryptocurrencies and Bitcoin also taking off in the last couple of years is because of this massive credit creation by central banks across the world. But we take Sri Lanka, for instance, if we create excess rupees, the only people who demand Sri Lankan rupees are Sri Lankans. So that deal doesn't have a home outside of here. So that has to either circulate within our country, which then results in either kind of driving up prices or driving up a higher trade deficit and balance of payments pressures that starts eroding the value of the currency. So that's an important difference between countries like the US and Japan and countries like Sri Lanka.
Right. So clearly there is a bigger, what do we say? It's a different game altogether when you see it that way. Us printing money is definitely not the same as the US printing money because they obviously have a global demand for their currency. So we had the opportunity to speak to a lot of people in the import sector. Some sectors have been just completely shut down, like the vehicle imports and all that. So I know we have a few things in place, like we have limitations on what you can bring down. I know there are potential rumors of more restrictions coming in, but with the import restrictions, I know we had a new few guidelines on outward remittances as well, outside of Sri Lanka. Are these the right things to be doing? Is this what it takes? In your expert opinion, if you had the power and you could make those calls, tell us.
Yeah, so I think the rationale or the thinking behind these import restrictions, it stems from one of those manifestations of money that we alluded to earlier, right? So what I was saying was that when you have expanded money printing, it typically results in greater import demand, and then that causes pressure on your balance of payments, and your reserves, country's reserves, start to see some pressure. And we've seen that in the first half of this year. We saw import growth in 2021, first 4 months, is higher than what it was last year by a long way, and even higher than levels in 2019, right? So that's really what has caused our reserve, the foreign reserve. So we had at the end of 2020 about $5.6 billion worth of foreign reserves. That has come down to $4 billion by the end of June. So we also have a lot of debt maturities that we need to settle in the second half of this year. So we have about $3.6 billion worth of dollar debt that has to be paid back in the rest of 2021 as well. So that matched up against $4 billion worth of reserves means that it's a very precarious situation in terms of managing our external finances. So that is why the government has, gone to this extent of restricting imports to try to put some kind of stop or some kind of controls over the cash that's flowing out, right? In terms of doing something different, I think what a middle-income country like Sri Lanka would normally be doing in this situation is that you'd recognize the fact that you have these large debt repayments that have to be settled. So what you do is you tap into global capital markets, global bond markets, obtain financing, and use that to refinance the capital portion of what you need to repay, and you service the interest portion, and you go on. And we've been doing that all this time. But what happened around early 2020 was we lost access to global capital markets after our credit ratings were downgraded. So in that situation, then you find it difficult to raise new cash. So you have to settle your liabilities using your reserves, and right. That's always a tricky position. So what I would do is I would do whatever I could to regain access to global capital markets, and that means implementing policies that can generate that confidence, right? Yeah. So the first thing we have to do is we have to try to get our credit ratings back on track, back up to a level above the CCC level, and so one avenue of anchoring confidence, or anchoring the credibility, is to have an institution like the IMF coming in, having a program with Sri Lanka. So that is one avenue. So if you are able to do that if you're able to generate that confidence without the IMF, that's fantastic. Mm-hmm. But it's quite tough for a country like Sri Lanka to be able to do that, right? So the thing with institutions like the IMF is that it's not the real volume of money that they provide, but really the fact that they are able to signal to global markets that, look, this country is on track, they've got a program, they've got a sustainable path to meeting their commitments, and then international lenders then feel confident. Okay, look, these guys seem to have a plan. We are happy to open the taps again and start financing you. So that is the way to kind of get out of this situation without having to impose all these restrictions on your imports. Because the issue in Sri Lanka is that when we restrict our imports, they actually could hurt growth as well. Because 80% of the imports that Sri Lanka uses are actually for either intermediate goods or capital goods, which are part of the production process. So if you start clamping down on that, you're going to hurt the entire growth process across the board.
It's stuff to send back out.
Fairly counterproductive.
Right.
Exactly. So even to take the apparel sector, for instance, 60% of the inputs for the apparel sector are imported. Yeah. So it's not sustainable to continue to restrict imports. So what we need to do is to focus on measures that can really enhance the inflows into the economy in the longer term.
Deshal, thank you so much. You've been fantastic, man. Thank you for taking your time, breaking it down for us. And we hope to connect with you maybe in the future. Thank you so much for your time.
Congratulations. Have a great day and best of luck for the rest of 2021.
Thank you, guys.
Deshal.
It's been a pleasure.
Thank you.
Bye.
Hey guys, the SLIC Hot Seat is featured by, of course, Sri Lanka Insurance. We want to thank all our guests, you for watching. Please like and share the video, and we'll be back.
Sri Lanka Insurance Motor Plus, driven by you.